Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. The last video on EURCHF was on the 17th of February, in which I cautioned the formation of a head and shoulders bottom. This bullish pattern was eventually completed over here on the 5th of March. The textbook target is at 0.9760. I also highlighted that there is a resistance at 0.9581. Now, EURCHF closed above this resistance but failed to hold above it. So now I believe that EURCHF is in the corrective phase of this bullish pattern, and a correction to around or maybe even slightly below the neckline is common and acceptable. After this correction, EURCHF should enter the resumption phase to resume the upside. I shared on the 2nd of March that Home Depot may be nearing the completion of a head and shoulders top. This was achieved on the 7th of March. The textbook target resulting from this bearish pattern is at 323.98, but note that there are supports at 348.33 as well as 358.14 that could bounce Home Depot higher when tested. In the last update on 9th of February, I said to remain bearish on Nissin Foods. Now, Nissin has since broken below the support at 3,124, and a subsequent rebound over here failed to reach this resistance altogether. The next target remains unchanged, textbook target of the head and shoulders top, 2,539.5. I last covered Shell in the video on the 29th of December last year and said to wait further for price action development to be certain that the second shoulder has been formed. Now, I believe the second shoulder over here has been formed after this week's decline that closed below the 20-week simple moving average. Also, I was waiting to see if price action forms a horizontal neckline. It did not. In any case, I will consider this bearish pattern to be complete if there is a close below this slightly upward sloping neckline around 2,382. Starting my list of new coverages, the first name that I will cover is Bank of America, but I'm 4 days late, to be honest. This name has completed its double top on the 4th of March. Price action has since fallen. The textbook target of this bearish pattern is at 37.5, but I think in the near term, Bank of America could first advance because there were two bounces over here and over here off the firm support at 41.11. If there is a rebound, we should view this rebound as just the correction phase of the bearish pattern. Price action could go back slightly above the neckline at 42.78 before resuming the downward trend. Moving on to the important US 10-year government bond yield, I believe there is potential for this to form a head and shoulders top, a bearish pattern. The 10-year yield bounced off the support here at 4.1280. Now, one of these two things must happen for the bearish pattern to be formed. Number one, price action falls immediately from here, which would qualify this as a second shoulder, and close below 4.1280 to complete this bearish pattern. Number two, price action rises further from here, but ideally doesn't reach 4.5 and falls thereafter, and eventually closes below 4.1280 to complete this bearish pattern. It is still too early to confirm, but we will wait and see what happens to price action development. This next new coverage is a Hong Kong listed stock named Meituan. I suspect that Meituan is forming a head and shoulders bottom. A weekly close above 213.6 will complete this bullish pattern that has a textbook target at 365.4, while the resistance at 296.6 could block Meituan from going higher. Now note that Meituan this week closed above the 20-week simple moving average, so upside is definitely preferred at this juncture. Covering only one new FX cross in this video, an exotic cross, dollar against the Brazilian real. Dollar real may be forming a head and shoulders top, which will require a close below the neckline at 5.6769 to complete. Once complete, the textbook target is massively lower at 5.0403. There are two firm supports, firstly at 5.4063 followed by 5.2871 that can prevent dollar real from reaching its target. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.